Take a look at oil, please. How bad is it now that the stock market's open?
Well, I tell you what, down $1.94, and that's going to tell me this. Again, Stuart, just because oil is going down, we would have to think that the consumer would be happier and we'd start to see some retail sales come back. But that hasn't been the case since oil began that slide. So we're in trouble here, and it's just because of not our own government policy or our own Federal Reserve, but it's also China. I think Jim Chano's saying China's a lot bigger than we think it's going to be, and we're going to get buffeted by the wave.
Look how quickly you got to 800.
For the last 20 years, they've grown 56 times. No such thing as a soft landing if they start to falter.
Oil down over $2 now at 38.42. It's down 5%.
Down a 5% drop in oil.
850 already.
And we've got
900.
All right, now we're down 900 points on the Dow Index, 950 points. Remember, please, if we go down 1,100 points,
that's collapse right there, Linda.
The circuit breakers come in and we shut down all activity. Now we're down 926. 5.5% down, 15,500. That's where we are. A sell-off and a half in the very early going on Wall Street. Right, Mary?
This is the great liberal reckoning. This is the great debt reckoning. This is the great monetary experimentation reckoning. Governments around the world following the lead of this administration and the Pelosi Congress borrowed trillions of dollars. They took that money, they spent it on unproductive projects, and they crushed the productive parts of our economy.
All right, now what I'm looking for is someone to say, to come in and say, Facebook in the 70s is a buy. Apple in the 80s maybe is a buy. And look who's on the phone, David Waddell from Waddell and Associates, who says, yes, do some buying. Is that what you're saying, David?
It's a buy?
I do. I think it's a little too late for investors to be hedging. You know, we haven't had a pullback for over 4 years. We haven't had, in the history of the stock market, 7 consecutive years of gains. And so this correction, to me, was somewhat broadcasted. So as far as hedging, you should already have done that. The question is now, you know, markets are so fast these days, so algorithmic. The VIX went up by the most it's gone up ever.
Okay, now we're down 1,000. All right, David, come on. What are you gonna buy? If you think this is a good time to buy, you tell me what you're gonna buy with the down 1,000 points almost.
What are you gonna buy?
Well, I'm not saying you buy voraciously, but there's already been a bear market in many areas of the market, and there's some that are somewhat insulated from it. So let's consider the bank on your corner in Iowa. We see strength in home builders. If the Fed is forced to renew sort of monetary easing, that's just going to allow the unemployment rate in the U.S. to drift lower, which underscores the strength of household balance sheets. And so there are some areas of the market
David,
that are somewhat
I hear you.
insulated.
I've got to go to the New York Stock Exchange floor. We're down 1,000 points. I believe that is the biggest intraday drop ever seen for the Dow Jones Industrial Average. Can we bring up the volume from the floor of the exchange? I'm hearing a lot of shouting and screaming down there. I'm not implying that there's panic. But I am implying that there's high excitement and high anxiety on that exchange as the Dow drops 950 points. I'm looking at individual stocks. What was that on Apple?
Apple's right at 98.
98.
Down 7.25%.
I saw Facebook go by in the 70s. A drop of maybe $12 on Facebook. Now, that's a decline and a half. I'm not sure the percentage.
Facebook is at 75.80, 75.40. Down 12%.
Down 12%.
Silver's
Netflix,
down
I'm
too.
looking at down $16 at $87 per share. What else have I got? Tell me numbers. Tell me stocks.
Yeah, let's have a look at Walmart. See
Apple
where Walmart
97 as of right now.
97 on Apple, yep.
Wait a minute, did Apple touch 92? Whoa, there's a sell-off and it bounced back. So somebody jumped in, bought Apple at 92 and took it back to 97. Not bad. We're down 1,089. I do believe the circuit breakers kick in if you hit 7%.
That's right.
6.4% down now. If we hit 7%, the market action closes down on the New York Stock Exchange. Scott, somebody come in, please. What do you got for me?
That's 7%. 7% drop.
That, you know, we've got all the commodities, even though the dollar is weaker today, are coming off very wary. That's something we should be worried about. And as far as what would I buy today, right now I'm not touching stock, Stuart. I'm going to buy a bus ticket out of town.
Well, somebody is. Scott, let me tell you this. Netflix dropped all the way down to 85 earlier this morning. It's bounced back to 91.
minus 6%
So somebody
right now.
came in and bought it at 85. Same with Apple. It touched 92. Somebody bought it. It's gone back to 97. Maybe a lot of people bought it at that level. Why are you laughing, Scott Shelley?
Well, because this thing's not over till it's over, and I think that we've got some guys on our desk that are saying that they want to see the S&P 500 at 1,600 and gold at 1,600, and then they're going to start to take their trades off.
Okay, and by the way, oil is now down 226, challenging the $38 per barrel level. Very close to the 37 handle. Harry Dent is with us. Let me see you, Harry. Where are you? Let me see. I think you're in Florida.
Turn it on.
Okay, now, well, I'm glad to see you, Harry. Now, you told us many times on this program in the past that we would eventually see, within the next couple of years, 5,800 on the Dow. Are you saying that that's exactly what's happening now? Go.
Yes, and this takes a year and a half or so, just like the 2008 crash. This is the beginning. We've been warning your audience and our subscribers, get out of this bubble a little early than late, because when they first crack, you can be down 30 to 40% in just the first few months. And we already saw that happen in China in July. So this is serious. It's going to get a lot more serious. There will be a bounce at some point. And the problem, Stuart, is once we go into this mode and it starts to crash, you can have violent downs and violent bear market rallies. It gets very hard to play. I'm just telling people, if you haven't sold already, the next time we get a strong bounce, lighten up or get out or hedge, because this is a major bubble globally, and it's going to be a major burst. Bubbles don't correct. They burst.
Okay, you've got to tell me, what is the fundamental problem around the world? Why are we seeing this? You've got 20 seconds.
We've been saying for years, China slowing after the biggest bubble in history. That kills commodities. When commodities go down, emerging countries go down because they're commodity exporters, and then the whole world goes down. The oil thing alone is going to kill our energy industries and our highly leveraged frackers in the United States. That's the first thing we're going to feel. Debt defaults,
they're losing their jobs already
in the United States that have nothing to do with our economy slowing.
Is there anything you would buy, apart from gold, is there anything you would buy right now?
Really, we've been telling people, get into the safest treasury bonds, be in the U.S. dollar. That's going to go up in the crisis like it did last time. But gold is the only thing going up now, and it's not going to go up for long. It may go up in the early stages of this crisis like it did 2008, but it's eventually, I'm predicting gold in the next year or two is going to be down to $700 or so. So basically, when a bubble bursts, the problem is, Stuart, everything goes down because the bubble has to be erased. Credit bubbles create financial asset bubbles, and then they burst. Not a correction. Don't see
because people are jumping in and buying.
Opportunity.
All right, Harry, stay there for a second. I just want to update everyone on what's going on here. Literally a couple of minutes ago, we were down over 1,000 points. Now we're down 780. What have you got, Ash?
It's interesting. Been watching Facebook. You talk about people jumping back in. It was well below $80.
It was 72.
72. It's come back up close to 80 now. 79.50. So it's down 6.5%, 7% right now. But money's coming back into it. People are biting at it. It gets low enough on Facebook.
Same with Apple. Hit 92, bounced to 97.
Which may explain why we're coming just a bit off of that $1,000-point drop.
Yes. Apple is now at 100, just so it crossed at 100. So you've gone from, what is it, 99 at the open? I don't know what it actually did open at. Dropped to 92,
94,
bounces to 100. The Dow was down 1,000. Now it's down 780. So you've got people, obviously professional traders, and maybe some of our viewers, who knows?
Yeah.
There's not many viewers, however, who are in and out in a couple of minutes. Not many people actually do that. Day traders, you're welcome to watch the show and see what's going on. But I don't think there's that many of you with a stomach as strong as that. Maybe I'm wrong on that one, I don't know.